If you've ended up here from our previous blog on the rent a room scheme for short-term furnished lets in the UK, then welcome. If not, go and check that one out first to see if this is the information that you need. So following on from that, none of us are turning our nose up at the proposition of some tax-free or just extra income. So what do we need to know about letting our properties out on a short-term basis? Just a disclaimer, all of this information, as well as in the previous blog about the rent a room scheme, is involving the short-term rental of your own furnished property. This is not for long-term tenants, for landlords, or for the rental of additional properties. For more information on that, you'll need to check out our other blogs. So with a vacation or holiday rental, there is a real overlap between your personal usage and the usage by your guests. This place is still your home, and likely you spend a good chunk, if not the majority of the time there. So therefore, figuring out which expenses can be deductible is a bit tricky. So we'll start with what definitely is. So firstly, we've got any fees related to the advertising or booking of the property. So using a site like Airbnb, for example. And following on from that, if you have any professional photographs taken, any professional marketing, advertising, any fees associated with that too. Obviously, the cleaning costs for before, during, or after a guest's stay. Then we've got items. And then we've got any items that are specifically provided for guests. Then we've got any items that are specifically provided for the guests. So this could be separate bedding, towels, things like that. Having strangers in your house is one thing, but having them sleep on your sheets may be different. So you might want separate things like that. This would also include the greatest joy of joys when turning up into any holiday, finding a hamper full of local treats, tea, coffee, and all the rest. It would also include any repairs for damage done specifically and exclusively by guests. So we are not talking about general maintenance. We are not talking about new appliances or the replacement of old appliances. We're talking about damage that a guest has caused that needs repairing. So they've spilled red wine on your beautiful white carpet, or they've broken a window, something like that. So based on that list above, or that we've just talked about, we are looking for a very clear distinction on costs that have only arisen due to the fact that you've rented out your property, or costs that would have been incurred anyway. So your maintenance, your wear and tear, but also things like your water, electricity, home insurance, Wi-Fi, all of that kind of stuff. In terms of a lot of those utilities, there are all kinds of smart meters and apps that you can get these days so that you could track exactly what was used during the guest stay. This would be preferable because obviously the costs of these things fluctuate throughout the year. There might be more water used in summer, more heating used in winter, for example. The alternative is, at the end of the year, looking at the yearly expenditure and working out how much was used by yourself and how much by guests. But as we said, this will fluctuate massively throughout the year. So option number one would be a lot easier and would be preferable. Something else we all want in our holiday rental is the subscriptions. We want Netflix, we want Amazon Prime, we want Disney Plus, you name it. If you're not having a pajama movie day on a rainy day in your UK holiday, you've not done it right. So as a host, providing these subscriptions is almost a necessity. Again, though, there will obviously be an element of personal use during the time that you live in the property. So claiming a portion of these subscriptions using similar principles as we already discussed is a good idea. So for example, if you let out the property for 1 week during a month, claim a quarter of the subscriptions costs during that month. And finally, the greyest of all grey areas is the upkeep and general maintenance of the property. Given that you're the one living in it and causing the majority of the wear and tear, you do need to be very careful with what you claim here. And to be honest, it's very likely a case-by-case basis. If you live in your home 50 weeks of the year and you get a new bathroom, you're the one benefiting from that, and it is not a deductible cost. So as a rule, any large repairs or maintenance that are not incurred due to the rental will not be deductible. But like we said, this is very grey, it's very nuanced. So although we've covered the main costs involved, this isn't every piece of advice possible. And of course, if this is something you're going to do, we would suggest talking to an accountant about your specific circumstances. So overall, if you do have a property and you're not too fussy about letting strangers into your home, then becoming a short-term rental could be a way to literally get your vacations to pay for themselves. For more information on this or other ways to make sure you're claiming all you can through your tax return, inquire with us today.